I'm going to ask you a straight question. Friends, foes, frenemies.
We look at fintechs as friends. We look at fintechs as complementary to what we're offering in the lending side. In the payments and POS side, it's more of frenemies or foes, depending on how you want to look at it. But the market's big enough for everyone to play. And usually when we look at competition, we don't necessarily look at the other competitors in the market, but we look at our own services and say, does our services fit a need? Are we doing the right thing for the SMEs, for the individual to run their business? We don't say this guy is able to fund this amount of money, we're only able to fund this amount of money. We sort of look at it very straightforward. How are we helping the SMEs that we can get to? The market's big enough, and we can definitely do that together.
I want to welcome you to the second season of Couchonomics with Arjun. Join us this season as we go beyond fintech and payments and embark on the journey into the future of financial services, a future which will be shaped by existing and new developments in technology and innovation, including and not limited to the likes of embedded finance, open banking, ESG, various versions of metaverse, decentralized finance, digital currencies, and other trends. On the couch, we're going to have the most influential and progressive-minded founders, executives, investors, regulators, innovators, and industry commentators from across the MENA region and beyond. Join us as we unravel a multitude of layers of the financial services industry and try to learn how technology will continue to impact the world that we live in. Couchonomics with Arjun is proud to collaborate with some of the most respected and innovative names in the world of payments, fintech, and technology. Ardian is a reliable end-to-end payment solution that provides innovation and flexibility to help businesses achieve their ambition faster by turning payments into a strategic growth driver. Get everything you need with TwoU, a Saudi-based super app for delivery, mobility, on-demand services, and a lot more. TwoU connects you to everything you need to enrich your daily lives by building an ecosystem across its end consumers, merchants, and reps. Visa is a world leader in digital payments with a mission to connect the world through the most innovative, convenient, reliable, and secure payments network to enable individuals, businesses, and economies to thrive. Jidea is a leading fintech and payment solution provider founded in Saudi Arabia, expanding rapidly across the region with established operations in UAE and Egypt. Jidea's vision is to empower merchants with the tools to start, manage, and grow their business. M2P pioneers next-gen fintech through innovative offerings across payments, lending, and banking landscapes. Their comprehensive tech stack powers end-to-end banking services, BNPL, customized credit cards, prepaid cards, and more. Welcome to Couchonomics with Arjun. This is an extra special episode for three reasons. Firstly, it's actually the first episode in 2 seasons that we have ever recorded outside our studio, and we're recording in Riyadh in Saudi Arabia. Secondly, we get to record this episode in what I call the epicenter of the fintech ecosystem, which is Fintech Saudi. I'd like to thank Nizar Al-Haider and his team to be gracious enough to host me here and let me record a couple of episodes. So this is the first of 2. And thirdly, I have who I've now started calling a dear friend. I actually met him a couple of years ago at one of the many events which happened these years. And over the last 2 years, he's become a bit of a mentor to me in terms of my quest to understand better the Saudi ecosystem, especially around financial services and fintech. His name is Paul Melotto. Paul is a board member of Alraedah Finance. Paul, welcome to the couch.
Thank you, Arjun. It's a pleasure to be here, and glad you could make it to Saudi Arabia finally.
No, this is great. Right? We've always wanted to do it. It wasn't easy, but when Nizar stepped in and said he would help out, I said, I'll take that offer in a minute, and here we are. We're in Fintech Saudi. You obviously have a lot to do with the fintech group out here, but let's start. I've got a lot to cover in the next sort of 45 minutes with you, right? But where I want to start with is this sort of, it's a personal view, and maybe you'll correct me on it, right? We in the financial services world talk a lot about banks and what banks are up to, right? Over the last sort of decade, maybe a little less, we've been talking a lot about fintechs. But for some reason, the NBFIs or the NBFCs seem to be forgotten, right? So my question is, firstly, why are they forgotten? But secondly, more interestingly, what I'd really want to hear from you is, what's the state of the nation with regards to the NBFIs in KSA?
Yeah, I think, NBFIs have been around probably just as long as banks and in different forms and different substance. Financing regulation just came into effect back in 2014, 2015. I've been here since 2009 with financial services and NBFIs, mortgages, and now SMEs. So it's one of these things that is stuck in between the whole ecosystem of banking and now the technology aspect of fintechs, right? NBFIs have balance sheet. They utilize balance sheets similar to banks. They take more risk, and in support of the ecosystem, there's a good combination of bank financing and NBFI financing that allows the economy to operate. But we fly under the radar most of the time, right? We're not as sexy as the fintechs, and we're not as big as the banks. But most NBFIs, if you just go to their websites and look at their financial statements, are very profitable and growing, and have substantial balance sheet and have substantial financial backing.
And that's what I just don't understand. It's a conundrum in my mind, right? So you're pretty substantive in your size. There's quite a few of you, right? You're profitable, right? You do use technology because, in effect, efficiency is very critical for you, and I mean efficiency in the broader term. And you actually address some of the biggest gaps that might exist within the ecosystem. Despite all of that, you guys don't get enough recognition or visibility. Tell me the reason. Give me the honest reason.
I just don't. It's not at the forefront of everyone's conversation, right? Everyone likes the new shiny thing that comes by, and right now that's fintech. And actually, between fintechs and NBFIs, there's a lot of synergies, a lot of collaboration that I can see that can happen in the market. We're looking at different things on the fintech spectrum, and we're building out our own ecosystem, right? So we're looking at payments, we're looking at restaurant POS to continuously grow out with a strict focus on SMEs.
Yeah, and I'm going to come to that later.
Yeah.
So let's dwell a little bit more. You use the word micro and SMEs, right?
Yeah.
So let me just put the micro and SME market, right? So here's another sort of one of those sort of billion-dollar questions, or several million-dollar questions. Nearly everybody talks about SMEs, MSMEs. Nearly all of them say they're underserved. There is all kinds of government intervention, regulatory intervention. Banks talk about how important MSMEs are. Obviously, NBFIs do. A number of fintechs are trying to sort of solve that problem. The problem doesn't seem to get solved, right? If anything, you could argue in certain cases the micro small businesses are underserved, and they might be more underserved now than they might have been 10, 20, 30 years ago. Again, I'm being emotive. I'm just challenging the status quo. Why is that the case?
I think NBFI, these micro businesses and SMEs are underserved, and they will continue to be underserved for a long time, no matter how much effort you put into it. I think, though, we are making headway, right? And not necessarily just in financing, right? Because it's not necessarily a financing gap.
Yep.
It's a liquidity gap.
Okay.
So as payments companies do instant payments for SMEs, or the buy now, pay later team, right? A lot of people look at the consumer aspect of buy now, pay later, but there is an SME aspect, right? Getting more liquidity into the hands of SMEs faster that will not allow them to need more financing, right, from financing companies. So it's really a liquidity solution, not necessarily a financing gap. So all these different little segments are making ends to the SMEs or the micro businesses to get the liquidity in their hands faster, and that gap is slowly closing. I don't necessarily think you're ever going to get the gap to be closed, similar to you're probably never going to get to 100% cashless society as well. So it goes hand in hand.
Okay, so let's talk a little bit about that, right? So obviously there's a lot which is being done in terms of national infrastructure. You talked about faster payments. We've talked about support coming through from government and banks, right? And sometimes in combination or partnerships with NBFIs. So let me try and connect the dots out here, right? So give me a couple of examples of what has happened in the recent past, right, where governments and banks have either combined with NBFIs to sort of serve the micros and small businesses better, right? But then my question to you is, the second half of that question is, what more needs to be done?
So I guess let's talk about the first part. A lot of government entities that have been created, like Moonshot and now the SME Bank, as well as the Social Development Bank and others, have all been financing SMEs, whether there be startups or providing financing or enabling NBFIs to also provide a wider network, a greater distribution of their services and products. We've participated for a long time with Moonshot in their indirect lending program. We were a direct beneficiary, I believe, of 11 tranches of financing that we've distributed to SMEs and micro businesses in the market through, our product was point of sale or merchant cash advance financing for the most part. But then you have other businesses that do auto leasing and equipment leasing, et cetera. So you have this diversity that supports the growth of SMEs in that sense, with subsidized financing costs in the market. So it makes a lot of sense for these government entities to partner with NBFIs and other financial institutions to have a much wider reach.
Okay, and what more needs to be done?
I think, as the entities grow and as more micro businesses and small businesses come in part of Vision 2030 as well, I think we need to expand outside and drive not necessarily just the public sector to provide this financing, to fill the financing gap. I think you also need the private sector and the international community. And I think there's very creative solutions that can be done with the players that are in the market today to bring in more foreign investment into the SME financing and fintech space to drive this closure of the gap or to increase the penetration of liquidity to the SMEs.
Okay. Now, so let's go a little bit deeper into this funding gap. Now, I appreciate that the problem with the micro and small businesses is more about the liquidity gap rather than the funding gap. But funding gap is, if I may say, a subset of that liquidity
Yes.
gap, and arguably a substantial part of that sort of liquidity gap, right? So here's the hypothesis, correct me. It's not necessarily a problem of availability of, I don't want to use the term dry powder because that gets gets alluded to the venture capital, but let's use the word dry powder in terms of available funds to be deployed. But it is more around, the fact that there's opacity or opaqueness in terms of being able to understand what that MSME is doing, so that, the data is not that clear. Collection mechanisms are a challenge, right? Is there more which needs to be done in terms of funding mechanisms which are non-capital related, i.e. guarantees and co-investments potential? Well, let's go back to guarantees. Is there enough of that in the market today?
To a certain extent, I think when you look at the gap, obviously you look at the medium-sized businesses first, and that gap is probably smaller because more people like to dabble in the medium business. It seems safer But then when you get to the micro businesses, there's just a lot of fog about data, about ownership, about structure, about where the money's going, where they're using the money, and then you have to look at how long they've been in business and the ultimate beneficial owners. So it makes it very tedious. Some of the data is still not available electronically. Open banking, when it comes for SMEs, will obviously provide more clarity and better structure to the data to make it easier to use. But again, some of the SMEs that we're dealing with, or the micro businesses that we're dealing with, they bridge their own funding gap by utilizing their personal income and getting financing, whether it be personal loans and such from the banks to support their businesses, which is a good sign in the sense that they've committed themselves to building a business and then looking for financing.
Okay, so before we move on to the next topic, which is fintech, I'm going to ask you a tough one. Banks do very well in this part of the world, arguably, 2.5x as compared to the global peers. Do you see any reason why they're going to actually change their attitude towards servicing the small businesses?
I think we've seen a little bit of a shift today, and I think that's primarily due to the interest rate environment and the squeeze on margin, right? When you look at personal loans that were being offered 2 years ago at below market rates to grab market share, that today would not be issued because of where cyber is today. I think banks are now leaning in more towards SMEs to provide that gap in margin and delivery from that. So I think banks are interested to a certain extent, but my expectation from banks, as interest rates eventually will come down to a more reasonable level, will push back into the retail market. It's a lot safer from a credit perspective. It's a lot easier to process. It's much easier to scale within the bank. And again, you have 32 million population of individuals and maybe 1.2 million SMEs in the market today.
Fair enough. Let's switch topics to fintech. Right. What's your view as Paul, looking from the outside in? Obviously, you do speak to a number of fintechs in a number of different ways. Where do you think the ecosystem is in its evolution? What do you think is going very well? Where do you see that there are blaring gaps?
I think it's going very well in the sense of in the area of payments. There's a lot of payment companies entering into the market or wanting to enter into the market. I think lending solutions, but more on a facilitation basis from the peer-to-peer debt crowdfunding companies. But we're missing certain elements around support functions like AML and KYC, technology and streamlining that process. We're missing some around RegTech and regulation to support how we implement certain aspects in line with regulation. So I think those pieces can definitely support this gap. I think open banking, again, will support this gap. And again, a lot of the fintechs don't necessarily want to use or have balance sheet to use. So that's where banks, retail investors, NBFIs come into play. So I look at fintechs today as more of a facilitator. They facilitate overall banking transactions for others. And it leads to a very good partnership opportunity.
So I'm gonna stop you right there. I'm gonna ask you a straight question: friends, foes, frenemies.
For us, we look at fintechs as friends. We look at fintechs as complementary to what we're offering. in the lending side. In the payments and POS side, it's more of frenemies or foes, depending on how you want to look at it. But the market's big enough for everyone to play. And usually when we look at competition, we don't necessarily look at the other competitors in the market, but we look at our own services and say, does our services fit a need? Are we doing the right thing for the SMEs, for the individual to run their business? So we don't say this guy is able to fund this amount of money. We're only able to fund this amount of money. We sort of look at it very straightforward. How are we helping the SMEs that we can get to? The market's big enough, and we can definitely do that together.
Okay, so I'm going to put you on the spot with this. So let's talk about an example with friends. So give us a case study where you at Alraedah have actually collaborated with and I want a substantial example, right? But what we're very interested to understand is what led to that relationship, right? Rather than what is the relationship, because I think that's easier to understand.
So fair enough. I think we were one of the first. We were one of the first companies to partner with the fintech in the market today, and that fintech was Jidea. And the reason why we had to do this is, we wanted to launch merchant cash advance financing back in 2017, before even the Fintech Sandbox was set up. And our only alternative was to go to the banks, because the banks were the only acquiring service providers in the market. But the banks that we discussed this with weren't very interested in providing this service because it would require them to settle outside of their own customer base and provide services to other banking entities. When the Fintech Sandbox kicked off and Jidea went into the Fintech Sandbox, we discussed with them and we partnered with them. And we needed Jidea as a service provider, and we again supported each other. We helped distribute the terminals and their aggregation services to our merchants who wanted financing, and they provided a needed service of the effort of doing the payment splits in the market. And we grew that substantially enough that I think there were some challenges with the banks seeing this as a little bit of a competition. Not much. We're not that big, but a little bit of a competition that we were sending back their payment terminals to the bank and deploying Jidea's aggregation terminals at the time.
So and I'm well aware of that sort of collaboration. I've seen you guys do a few more. So here's the question for you, right? So one of the things which gets talked about a lot is that the kingdom is still very expensive for a lot of fintechs to come and set up shop, right? You can correct me one way or the other. Does that naturally lend to an opportunity for you in Alraedah to sort of become a soft landing for innovative new solutions, either domestically growing up or internationally flying in?
Yeah, I think, providing soft lending where it's synergistic and a win-win for both parties. Everyone wants us to talk about win-win propositions. The win-win proposition is to the
There is
extent,
a third win, by the way. There's a customer in it too.
Yeah, the customer. Listen, when we collaborate, the customer always wins.
Always wins. Okay.
But there is a win-win opportunity in the sense that, again, they're coming with very good technology. Their approach is, we want to come in, we want to get licensed. Licensing, for one reason or another, takes them a while, whether they're ready for it or not, or prepared to go through the steps required to get licensed. The cost of licensing, in the sense of the stuff that's needed to develop and pay, from cybersecurity and everything else, makes it very challenging. And I think, too, when people come into the region, they usually do their landing in Dubai or the UAE and then decide, there's this green pasture in the desert of Saudi Arabia, we need to go there. But everything they've set up to that point isn't necessarily what is required or necessary to operate in Saudi Arabia. So it makes it a very good collaboration point for us to support them in their endeavors here, while they support the growth of our balance sheet and our lending products, etc. That we can grow together.
So, Paul, that begs the question, right? I think I think you make a great point. Firstly, to a number of fintechs who are actually coming in from out of the world, I always turn around and say, only enter the UAE if you want to service the UAE. Don't enter the UAE with the intention of using it purely as a gateway into Saudi Arabia or any other part of the world. Because I personally think people need to understand, every country has their own sort of monetary fiscal policies. Their regulations are different, although they might be all part of the GCC or the so-called MENA region, which people don't actually understand is not a region. It's not a cohesive sort of economic region. It's basically a terminology used for a set of countries or a geographic landmark. Coming to the question, if you see such tremendous opportunity for being, as I call, soft landing partners for either homegrown fintechs or international, what have you done differently in the way you guys have set yourself up? So, how does one coming into the kingdom know that there's possibly a friend in Alraedah?
I think it's just right now we don't do a lot of marketing for it. It's just more word of mouth. I think there's a lot of opportunities. We meet with everyone. A lot of them don't fit within what we're trying to do because it's just something that we're not doing. And again, we're not moving off of our laser focus of SMEs. So to the extent that you're supporting SMEs in one way or another, to be able to grow what we like to call the top of the funnel, right? We're looking for these types of partners, and these types of partners are more from a referral source or referral based than going out to a larger marketing campaign. And what we want to set up is the framework to make it very easy for them to come into the market, to scale without the overhead costs required to set up in the market, and then launch from there into their own entity and continue going forward.
I agree. So we'll leave it at this. This is Arjun's opinion. I personally think there is a golden opportunity for what I call open-minded, progressive NBFIs, right, who are willing to adopt new technologies, processes, techniques, products. I personally think they need to do more. I don't think what it is a marketing outreach program, but I do think that if you guys were to position yourself as a great conduit to bring all this technology, and I don't just say financial technology, just technology into the ecosystem, I think you guys would catalyze and leapfrog your own growth and actually catalyze the market. The other thing here is that I would assume you would be quite open-minded and arguably more agile than some of the banks to actually take some sort of equity stake in these companies to ensure stability in the local market, because that's one of the biggest risks of working with fintechs, right? You can go into the market with a fintech because they've got this jazzy idea, but there's nothing which is substantive behind them, right? So again, I'm sorry, this is not a question, it's just purely rhetorical. I personally think this is a call out for me to all NBFIs, including you, to say I personally think there's a massive opportunity, and I think you could seize the opportunity away from some of the banks who are still, in my humble opinion, fairly complacent, right? And they're still struggling with sort of sorting their own problems. Let's move to how do you then compete against the frenemies, right? So what is it that you're doing or you've been doing differently over the last sort of X number of years so that you're more competitive against arguably these more agile, newer modeled, younger mindset entities? So what sort of transformation is happening in your parts of the business? Or do you feel that they're just insignificant for the time being, so why bother?
No, so I think, look, fintechs are significant to our business model. Fintechs, when we look at them and dealing with, let's say, the frenemies of the entire ecosystem, it makes it easy for us to decide which way to go, in the sense that even though we're working on our own payments product, everyone starts graduating, right? So when Jidea graduated, they graduated from an aggregation model to a non-bank acquiring model,
Yep.
right? So now what Jidea has done is given the ability for aggregators, not necessarily to go to the banks, but to go to Jidea and become an aggregation partner. So I can now do aggregation potentially with Jidea, and they can be still a non-bank acquirer. So everyone seems to be moving in the same direction to the certain levels within certain pillars, right? Because again, non-bank acquiring or just acquiring in general is technically a bank function, right? And has always been a bank function. And GDS moved up, and now we're moving up right behind it. So it's raised the bar, to say. And I think this is going to happen with all of these companies. So I envision that peer-to-peer lending companies are not necessarily going to stay peer-to-peer lending companies. They're going to evolve into more of a banking solution, which you typically have seen the evolution outside of Saudi, where the investors become a deposit base and they have a lending platform, because inevitably at some point in time they're going to have to all become profitable. And then you have the larger players in the market, which are the digital banks like STC Bank and D360. I think they have also, if they use their platform correctly, more of as a banking as a service platform and not necessarily a traditional banking platform where they want to go out and reach every single customer on their own. They can make great end waves into the market as well in support of fintechs in general.
Yeah, but I would imagine, I'd imagine some of you would take the ethos of banking as a service and actually offer something like that going out, because there's no reason why you couldn't, right? Because you guys cover the same sort of value chain. You could do, whether it's working capital financing, point of sale financing, salary financing, whether it's earned wage access to the employees. Because if I'm not wrong, I'm assuming the SME sector, or the micro SME sector here, contributes somewhere between 20 to 30% of the GDP, right? And definitely employs north of 70 to 75% of the workforce. So I think the opportunity exists. Let's talk a little bit about Alraedah, right? So you've obviously mentioned a few things about Alraedah already. So I'm not going to go over them again. One question I should have asked you is, currently, how many fintechs are you actually cooperating and working with?
Currently, I think we're working probably close to 7 or 8 different fintechs on different partnership.
Different use cases.
Yeah, different use cases and schemes in that sense. Sometimes they're a service provider to us. Sometimes we're a service provider to them. Sometimes we lend our balance sheet to finance MSMEs from their platforms. So I think we're working with close to 7 or 8 fintechs today, and we're looking to expand that going further.
Okay, so let's talk a little. As I said, let's talk about Alraedah. So in the whole NBFI world, right? There's a spectrum of players. Are you sort of the mid-size NBFI, or are you on the more sort of the larger end of the equation?
So we are on the smaller end of the equation from a pure capital perspective, balance sheet size perspective. However, we're probably in the top 2 or 3 from a profitability, return on equity, return on assets. And we attribute that to one thing. The entire organization as a whole is focused on SMEs. Most of the other NBFIs are more of sort of a buffet of personal lending, auto leasing, SMEs, credit cards, etc. For us, our focus for the entire organization is SMEs through thick and thin. This was even before COVID came out. COVID was a very, very difficult year for us because this is all we had, right, as SMEs. And Samad, as much as we want to complain, they stepped in a big way to support the SMEs and support the NBFIs that were supporting SMEs. So that was a remarkable step that everyone took to make sure that the ecosystem was on stable footing. So it was very helpful.
Yes, that's very interesting. So I have no idea what was the ideology behind why you went after SMEs. All I can say is I think you're in a great place right now because, with everything that I am experiencing over the last sort of, I'd say 10 to 12 years of actually either consulting or working in this region in different sort of wearing different hats, I think there is more and more interest which is diverting towards SMEs. I think there are better quality of fintechs that are coming in towards SMEs. I think there are more infrastructure plays that are going into SMEs. And I think the banks are still not waking up to the opportunity. So I do think you guys find yourself in a very, very good place. Let's talk a little bit about technology beyond fintech, right? And this is the question I wanted to ask you is right? So your overall differentiation, obviously you've said that one key part of your differentiation is that you're hyper focused on a segment. And so therefore, everything's built out to be as good as it can be for that segment. Talk to me a little bit about your technology adoption as a business, right? Because classically NBFIs globally and in the region specifically have not always been known as ones who are progressive in terms of adopting any sort of technology, right? Where are you on that sort of equation?
We like to dabble, so we're dabblers. We back in 2017 we started down the path of adopting machine learning and artificial intelligence to the point where we were scoring back then through our AI and machine learning platforms the credit aspect of our customers. And then we disbanded that during COVID because clearly none of the data that was there would allow us under those circumstances to be able to use those models, right? Because it's a trained model and there was no training data of what happens when this type of event. And now we've slowly moved back to doing that. So our main focus is not necessarily onboarding, offboarding, funding, etc. It's more on data and the use of data and integrating into certain aspects, right? The nature of our product of MCA and having payments data from our partners allows us not to necessarily need immediately the open banking framework to see the sales of our customers, etc., to make better decisions. So, we've used machine learning models to do expected credit loss provisioning, the pull-through of our pipeline to see how fast or how slow or which SMEs are more likely to close. We use machine learning models in our collection efforts to identify high-risk customers, do anomaly detection, etc. We use an automated machine learning platform. Our CEO of Alraedah is a data scientist.
Okay.
So we definitely have and see the importance of not just data, but it's the structure of the data, right? Because today banks have all the data that I'm talking about, but it may not necessarily be structured in a way to use that data in the best way possible.
So you mentioned data, you mentioned machine learning. I don't think you mentioned AI.
No.
Right. So I'm going to put it on the spot. AI, what's your view on that? And in context to your business and financial services.
Look, I think AI is up and coming technology. For us, machine learning makes more sense based on the data that we have and the information that we're trying to do. And, in our view, we're not necessarily looking to build out a whole data science function. So that's why we use automated machine learning platform. It does a lot of the heavy lifting for us. It's easy enough that I can use it myself. So I think from that perspective, it's very good. I think, let's go into the ChatGPTs of the world and these other Bards in Google, etc. I think this is good in the sense that it saves a lot of time and effort, and also it makes people more productive in the sense. So from a productivity perspective, we utilize these services today to just continuously evolve over time and test and try different things. So some NBFIs, not all, but some, are stuck in their old ways because just like complacency of bank, they're very profitable. Why do I have to change my model now? I'm making enough money that I don't need to do anything different than what I've been doing for the past, 7 to 10 years.
I'm going to put you on the spot. Last two questions. The one will put you on the spot, the other won't, I promise you. If there was one thing you would like the regulators to do, which you believe would unlock tremendous potential within this whole MSME and NBFI nexus, what would that be?
That you are putting me on the spot. I think, from a regulation perspective, they're in a very difficult situation. One being the regulator, and one to support and facilitate different initiatives. What would be very helpful, because we like looking at different products, but we don't have the capacity or the financial backing to go and build everything out in its fullest capacity. I think, just like they did for new companies coming in, they put them in a sandbox until there's regulation.
Exactly. Yeah.
For existing companies, there should be a sandbox set up as well, that we can go test out new products that we want to enter into the market without having to invest a ton of money to figure out whether or not this is the right product that we want to launch, and how we launch it, and what are the features of those products. Today, you have to build out a full model, a full digital model, etc., to launch a new product. We would want them to provide some leeway and some open air for us to be able to try out new products in the market.
I think that's a brilliant idea, and actually, to be honest with you, I wouldn't be surprised if that might be coming on your way. I'm not talking on behalf of the regulator, but I think this is a point which has come up a few times, which is, why not have product level sandboxes? There's also this very interesting concept, because a number of banks actually are realizing that if they've got to work with these fintechs, right? They cannot have their classical procurement processes, which take anywhere between 6 to 18 months to onboard a fintech. Secondly, a number of fintechs provide the same type of services, and so they want that sort of sandbox environment in which they can actually play around. Now, banks can possibly afford to build their own sandboxes. Not all of them can, but some would. What I've seen in some of the Western markets, specifically in the UK and in the Southeast Asian, Asia-Pac region, is this sandbox as a service sort of model, right? Which could be a very agile way of actually offering sandbox as a service. Now, whether that's actually championed by, a digital arm of an existing financial institution, or whether it's actually done by, a body that is, that is created or is existing from a regulator's perspective, I think time will tell. But I do think that is definitely needed. And I think it'll be well received by the other parties, which are the fintechs themselves, because I think they'll get the deployment. Last question, Paul. I'm sorry this is quite late in the evening. I don't want to keep you away from your family. So what's next for Alraedah? I'm not asking you to spill the beans and lay the secret out here, but what's the next 3 years? What's sort of the big, the big ambitious plans that you guys have, in context to the conversation we've been having?
Yeah, so I think from our perspective, I think we're moving in different verticals. We'll be opening. We've opened 3 new entities.
So different verticals, but sticking to the SMEs.
Sticking to SMEs.
Okay.
So we're driven by SMEs. It's in our blood. We want to support them, but we want to give a very holistic market, or a holistic view, or a holistic ecosystem for them to operate in. We're not going down the path necessarily of a full-fledged digital bank, but most of the services that we're talking about here, whether it's payments or cards or financing, it's all banking services in general anyway. I think also our view is that we want to open up the SME finance market to international financing. We're working with some of the CMA listed companies today to create off-balance sheet type of structures. We want to be able to start developing that process and becoming a facilitator for other entities that may want to do the same thing. So I think I think it's leveraging that and building the top of the funnel by spreading out to these fintechs that will contribute to what they need, which is a balance sheet, and they contribute to what we need as a much wider aggregation of SMEs and services.
Is there a plan to move into other countries?
No, not necessarily. I think Saudi is very, very, rich in the sense that
The opportunity
here is unbelievable, and that's why you see everyone knocking on Saudi's door that started in the UAE, and like we discussed before, I think the right approach would be, if you're coming to the Middle East, it's how do I get into Saudi, and Saudi being the hub and the spokes of your thing will be then the other smaller countries within. There's good regulation here compared to some of the other countries. There's a good VC market for companies here to get funding. There's a rich ecosystem, and it's growing. And you have a very highly educated, highly motivated Saudi workforce that will support the ambition of the country, the ambition of fintechs in general. And, I think the target number is 500 fintechs or 512 fintechs for 2030.
I have a feeling that number is going to be increasing.
Yeah, I have a feeling too. I think they're going to surpass that number.
Yeah.
With the number of fintechs, and I think it's the ecosystem that's currently here's responsibility to support that. Right? We're trying our best to do that. I think there's other entities that are trying their best to do that, but I think everyone, banks, NBFIs, regulators, Fintech Saudi, and others, all have the same shared vision.
Excellent, Paul. I think you summed up, I guess, the whole conversation very well. I think what I loved about today's conversation is that I think we were able to pay attention to sort of two very key parts of this whole financial services ecosystem. One is the customer, which is the micro and small businesses. The second is the NBFIs, which don't actually get written about or spoken about enough. I really thank you for coming in.
Well, I appreciate
this was a
it.
special
Thank you,
episode, and you were number one on the special episode.
I'm very happy, and Saudi's been home for a long time for me, and I think it'll be home for a much longer time for me as well. So I appreciate the opportunity to share with your audience.
Thank you.
Thank you.
So ladies and gentlemen, that was Paul Melotto, who is a board member of Alraedah Finance. I enjoyed the conversation. So with that, goodbye from Fintech Saudi in Riyadh. We will be doing one more episode this season from Fintech Saudi. So till then, goodbye, and I'll see you next week. Bye.